So you're a freelance makeup artist. Your little MAC makeup wearing, Sephora shopping, and I don't know what else, those places that my wife goes and shops at type of thing. This is how you get a mortgage. Now, makeup artist, listen up. What's up, guys? My name is Omar, broker and CEO of Alden Mortgage and Omar Realty. So as far as a makeup artist goes, you are what's called a self-employed borrower, okay? So self-employed, you're out there, you're doing your gigs, whether you work at a news station or you work at you're doing weddings and or whatever it is that you're doing, and you're just killing that makeup game. You are just polishing these broads up like it's a thing to do, or these dudes or whoever you are polishing up. Well, this is how we go ahead and do a mortgage for you guys. So whenever you're doing your taxes, which you are a 1099 employee, okay? So you're 1099 because you're self-employed, you're just doing your thing and you're just killing it. There are a couple of different options that we have. Now, we can go through a bank statement loan, which I'll go ahead and put a link in the description above, and I'll briefly touch onto it on this one. These are what's called a non-QM mortgage. These are the ones that we kind of don't want to go into because they are a little bit of a higher cost. We want to go ahead and stay on the conventional side, which is insured by Freddie Mac and Fannie Mae. Who's Freddie Mac and Fannie Mae, and where do these people come from? Well, these are companies. These are corporations. These are big corporations that insure these mortgage-backed securities. Now, as far as you being a makeup artist and now you're just, you're polishing everybody up and you're beautifying everybody, you are gonna have to be in this business for at least 2 years. 2 years, because we are gonna need 2 years worth of your tax returns. Now, whenever you are getting ready to go ahead and get into, get a mortgage, because you're obviously you're watching this video, you're doing awesome, good for you, congratulations. I hope you make the next person that goes and does whatever it is, like those Kardashian people or those Jenner people, whatever makeups that they do. I hope you're one of them. I hope you kill it, and I hope that I'm your buddy as long as we live. But as far as getting your mortgage goes, this is what we need to go ahead and take a look at. So you have, whenever you file, okay, this is what we look at, okay? We go in what's called the Schedule C. Your Schedule C on your tax returns, now on the top of the little tax return, you're gonna see what's called a P&L, or a profit and loss. These are going to be your tax returns. Now you're going to go all the way down. You're going to go ahead and go to line 31. Line 31 is going to be what we calculate as far as your total income goes. So if you're looking at that little guy and you're like, okay, that's not mascara in my eye. That's a really, really small number, because you went completely right off happy and you just lost your mind writing everything off. You got to increase that guy. So we have a front end ratio and a back end ratio. Now our front end ratio is going to take that amount, okay? So that line 31, we take that, and then we take between 37 and 39% depending on your credit history. Now your credit, please keep it above at least like 680 to 700. I mean, if you get into like the mid sevens, do it. If you need help with your credit, I'll put a link here how I got my credit up. Try to work on that a little bit. If you DM me or something like that, if you need specific questions that you want answered, or you can comment below, I'll go ahead and help out. But so let's say for instance you have your line 31, that's your total income that we have, and then you go ahead and take a look at how much mortgage, your front end ratio, which is your principal, interest, taxes, insurance. We have to be between 37 and 38%. So hypothetically, let's say that your total net income, like how much you took home, not your gross, your net income is so let's say we take those lines. So for the sake of argument, let's say that you made $120,000. That's $10,000 a month. $10,000 a month would put your front end ratio, which is about, let's say, I like to kind of gauge, because I like to give myself a buffer, because guidelines change all the time, and everybody's situation is a little bit different, but we go between 37 and 39%, okay? So you take that line, 120,000, that's $10,000 a month, and your total principal, interest, tax, and insurance cannot be more than $3,700. That is what you're able to afford. That's where we're going to go ahead and stick with. And that is the guideline that is able to go ahead and get you approved. Then we have something else that's called a back-end ratio. Now your back-end ratio is going to be, your car payments, your credit cards, whatever total expenses that you have that shows up on your credit report. So we're going to go ahead and take a look at your credit report. And then after we take a look at your credit report, we're going to go ahead and calculate all of that, and then that falls in what's called the back-end ratio. Now your back-end ratio is going to be between 47 and 48%. We could go up to 50%, but we kind of want to stay in that area because then it becomes a little bit weird once we get past certain thresholds, okay? And the reason why I give the 37, 38 and I give the 48, 49 is because once we go past those, we have to get what's called an exception, right? And when we get an exception, and we have to do what's called a manual underwrite, and we have to say, you know what, we're like teetering the limits right now, then sometimes they want a little bit more piece of the pie, and they like, okay, well, this is not going to be under the guidelines here, so we're making an exception. So they're gonna, they might hit us at a little bit of a higher rate, whether it's an eighth of a point, a 16th of a point. It could be whatever they end up deciding depending on each situation that we're in. So once we get those, and you could look at your taxes, you could see, and you'll know if you have trouble understanding your taxes and you're having trouble figuring out what your ratios are. Hit me up, DM me, Instagram, all that other stuff, link in the description below, or shoot a comment or whatever it is, and I'll be more than happy to go ahead and help you. But those are your ratios that we need to go ahead and stay in. So we have your income. We have 2 years worth of bank statements. Number two, I'm dyslexic right now. Number three is going to be how long does your money need to be in your account for your down payment? Now, whenever you are applying for the conforming sign, now there are the FHAs, there are the VAs, there are all these. Let's just say for the sake of argument, this is going to be at least 6 months worth of reserves. So what that means is that down payment that you are asking for will have to be in your account for at least 6 months seasoned. Are there ways around it? Yes, you can get gift funds. Gift funds, you're going to hear this all the time. Every single mortgage professional that you go and talk to, whether it's a mortgage loan originator that works for a company, or you talk to the big chief himself, and he will go ahead and tell you the same exact thing. You can get gift funds. Gift funds is like, it's a gift. Your family is giving it to you. Is there a repayment process that you have? No. We are assuming zero repayment. They're just giving it to you to help you get into your new house, whatever that whole entire thing's. Now, as far as credit goes, like I said, try to build that sucker up, try to get into the mid 7s. Your down payment, we could actually go almost zero down payment. You could do no down payment if you'd like. Link in the description below. I'll be more than happy to help you out. We'll go ahead and get that taken care of. But as far as the ratios goes, you want to stay in those ratios. If we end up going on the FHA route, we could actually go up to 56.99%. That's high. Please don't go house poor. If you call me and you tell me, listen, Omar, I need a mortgage, I need to be at this, and you are at that, I am going to just say, okay. I am not going to tell you, because this is your money, this is your world. I'm going to try to advise you a little bit, but I'm not a financial advisor. I don't know what you're projecting in the next year is going to be. I do have your fiduciary responsibility. I have to make sure hold your best interests at heart, but please don't go house poor, because even though you are making $120,000 a year, you really making that $120,000 a year? Maybe if you're on a W-2, that's a little different. But to recap, we have your credit score. Try to get that into the 7s if you can, but we can go down to 660 if you'd like. Your down payment, we can't go zero down payment. But remember, even though we could go 100% financing, okay? Even though I am able to do zero down payment, zero everything, you are still gonna have closing costs, whether you have impound accounts or whether you have, your title, your escrow, your insurances. There's a lot of costs that are associated, which I should probably make another video on total closing costs and how that is explained. But I'll do that in another video, and we can go ahead and go from there. But you do have to pay title, you do have to pay escrow, you do have an appraisal that you have to go ahead and pay for. You do have your inspections that you need to go ahead and do. So these are all costs that are associated with these loans that you have to make sure you take account for. And I don't give specific numbers only because each county is different. Some counties require more than in others, some require less than others. Me personally, I go with the cheapest one that I think serves the best, which is Old Republic Title. I have no affiliation with them at all, other than I send business their way. I say, listen, I need this. We open up title and escrow with Old Republic. I just find that they're the cheapest ones out there, and they do a hell of a job, and I have never had a problem with them. They're very responsive. So that's where I go. Now, we don't get all of that right away. Like once we got into contract, then they sent us a sheet. But for the gist of it, they're one of the cheapest and best servicing ones out there. Now, after we go ahead and we get your approval ready and all that other stuff is done, then we go house shopping, and then mind you, we see this. You see this? We do both ends. I'm not one of those real estate companies that go ahead and pretend like I don't do both. I do both. I own that company and I own that one. So if you want up to 50% commission rebate on your next home purchase, link in the description below. This will be perfect for your post-closing. Like we do it post-closing. Post-closing just means after closing, after everybody is paid, said and done, we receive our commission check. Then we go ahead and, after fees and everything, we go ahead and cut your rebate. After we cut your rebate, you could go house shopping. Listen, here's a very, very other important thing, and I can't stress this enough. If we are doing this, if we are trying to get you into a house and we are trying to do all of this, don't go crazy and start buying stuff. Don't be like, I'm gonna go buy furniture, I'm gonna go buy this, or I'm gonna go do this. You're not to spend any money. You're not to do anything. You are not to even so much as walk into a Baskin Robbins on credit without coming to me first. You are not allowed to do anything, because that is going to hurt us. Don't go with those buy here, pay here place. Don't do like, I want to go get a pair of Gucci sneakers or something like that, and you're going to do these 4 installment payments. Don't do any of that stuff. Please, for the love of God, don't do that. Then, after we go ahead and get you approved, which, like I stated, we have all those products available for you. And I went ahead and showed you where you could find your income so you could do your ratios. If you need calculators, my website, down in the link in the description below, you could go in there and you could calculate your mortgage and you could see it for yourself, kind of get a ballpark. Interest rates have increased. We're at 4.02% currently as we sit February 2022, because the feds are hitting us every single. There's going to be, now Goldman Sachs actually projected to have a total of 7 hikes in the course of this year of 2022. Goldman Sachs, I think we're only going to have 5, but that's still a lot more than what we should have. They should have. I'm not going to say nothing. We're just trying to get you makeup artists a mortgage. So, 2 years in business, bank statements, credit, your closing costs. We're going to have to go ahead and run those costs, that cost analysis, and yeah, that's pretty much all she wrote. Well, if you like the content, I feel like I'm missing something, and if I am missing something, then please let me know. There is more process that we do on our end, whether ordering your tax transcripts from the IRS and all that other stuff. But I'm not gonna get into that much detail, because I don't think you really want to know the process that we have to go do with our side. I mean, that's what I get paid for. That's what I do. I get paid to do the rest of this. I give you the gist of it, then I do all the back end stuff, so you don't have to stress yourself on that end. And if you want to yell at me, you can yell at me, or please don't. I'm sensitive. But if you do need any assistance and up to 50% commission rebate or assistance with your mortgage, link in the description below. I hope you like this content. I hope maybe I made you laugh in any way. Try to make this a little bit more fun, those dry ones out there. But link in the description below. Please let me help you out. Shoot me a comment, a like, whatever, a subscribe. Help us grow a little bit. I'd really appreciate it. Till next video, guys. Oh God, why did I do the gun thing? Why do I do the... I'm so stupid. God, I hate that.